final accounts with adjustments, or you can say financial statements with adjustments. Let me remind you the final accounts which we have already learned in our previous episodes. Final accounts are prepared on the basis of trial balance, and trial balance is prepared at the end of the year. There are three parts of final accounts or financial statements. Number one, trading account, that gives us gross profit. Number two, profit and loss account, that gives us net profit. And then balance sheet. Balance sheet gives us the financial position of the firm at the end of the year. If you remember, the basic principle of final accounts is that each and every item of the trial balance should go to the final accounts, either debit side or credit side. All debit items go to the debit side of final accounts, whether trading account, profit and loss account or balance sheet. And all credit items goes to the credit side of final accounts, means the credit side of trading account, profit and loss account or balance sheet. And closing stock is always at the end of the trial balance, means that's not the part of the totals of trial balance, but we have to take closing stock to the final accounts. If we take any item out of the trial balance, means which is not included in the trial balance, that always hits twice, one on debit side and one on credit side. That's why closing stock goes to the credit side of trading account and debit side of balance sheet. Be careful. When I say debit side of balance sheet, in fact, there is no debit and credit side of balance sheet. Balance sheet is not a ledger and it doesn't carry any debit side or credit side. It carries debit balances and credit balances. But for our convenience, we will say asset side is the debit side of balance sheet and liability side is the credit side of balance sheet. So let's come back to closing stock. Closing stock goes to the credit side of trading account and debit side of balance sheet. Now we are going to start adjustments. Adjustment means those transactions which have not been included in the trial balance, means the effect of those transactions are not on trial balance, but still we have to include all these transactions. So you can say by mistake we missed all these transactions. Now we have to include them in the final accounts. Basically, it's not an error. Just for the convenience of learning, we are going to assume that these things are the missing. Let's take one question. This is the trial balance as on 31st December 2017. Debit balances: opening stock 1000, purchases 2000, sales returns 100, wages 200, salary 700, cash 4000, long term investment 1000, goodwill 2000, and total 11,000. Credit balances: capital 2000, sales 4000, purchases returns 300, creditors 1000, bank loan 2000, rent 700, reserve funds 1000, total 11,000, and closing stock 300. Trial balance can be made in different formats, but for our convenience of the explanation, I am going to make it in T shape, just like ledger. Maybe in your school the teacher is making the trial balance in the format of particulars, debit, credit, in this way. But it's your choice, whatever the format you like. But for my convenience of explanation, I'm going to make the trial balance in T shape. Now the adjustment is outstanding wages 50 rupees. Outstanding wages means the wages we couldn't pay during the year and still we have to pay to our workers. Our trial balance on debit side is showing that wages is 200. It means wages of 200 has already been paid, but still we have to pay 50. So it's a matter of common sense that our trial balance is showing that 200 we have already paid, but still we have to pay 50. It means we were supposed to pay 250 wages, but we couldn't pay 50 rupees. Before I start the question, let's make the format of trading account, profit and loss account and balance sheet. On trading account, debit side you must write down before the start of question to opening stock, to purchases minus returns, and on credit side by sales minus sales returns and by closing stock. Be careful, whenever you write trading account or profit and loss account, you must write down trading account for the year ending 31st December 2017 and profit and loss account for the year ending 31st December 2017 and balance sheet as at 31st December 2017. I have already explained you all the reasons in my previous episodes. And when you make the format of balance sheet, you must write down on liability side capital plus net profit minus drawings. In this way, the question will become convenient for you. So first of all, let's take the items outside of trial balance one by one. Closing stock 300. You know, if you are going to add any item out of the trial balance, that must hit twice, one on debit side and one on credit side. So you know, closing stock is taken on the credit side of trading account. So by closing stock 300 and then it is taken on the debit side of balance sheet, means asset side, closing stock 300. Now the next item is outstanding wages 50. Let's pass a journal entry for the outstanding wages. The journal entry will be wages account debit to outstanding wages 50 rupees. You know, every journal entry has equal debit and equal credit. It means wages account has been debited by 50. It means this wages account will go to the debit side of final accounts. And now the thing is, where should go the wages account? Wages account always goes to the debit side of trading account. So you can write down 2 wages 50 and then 2 outstanding wages 50 rupees, means outstanding wages will go to the credit side at rupees 50, means the credit side of balance sheet. What is the credit side of balance sheet? Means liability side. So on liability side you can write down outstanding wages 50 rupees. It means we have taken up both the items, closing stock and outstanding wages. But let's see how it will be presented in our financial statements. So let's take item one by one from the trial balance. Opening stock 1000, it will go to the debit side of trading account. Purchases 2000, it will go to the debit side of trading account. In inner column, sales returns rupees 100. Sales returns, basically it's a debit item, but it will be taken to the credit side. That's why it is deducted from the sales. It means we are giving this item a debit treatment. So minus sales returns 100 and then wages 200. It will go to the debit side of trading account. So 2 wages 200. Then cash will go to the debit side of balance sheet. Cash on asset side 4000. Then long term investment. This is an asset. Asset always goes to the asset side, means debit side of the balance sheet. Long term investment 1000 on asset side. Goodwill, it is an asset. This debit item will go to the debit side of balance sheet, means asset side. Goodwill 2000. And then come on the credit balances. Capital 2000. Take it to the balance sheet credit side in the inner column. Sales 4000. It will go to the credit side of trading account. So 100 we have already written and 4000 in the sales, it will be in the inner column, and in the outer column 3900. Purchases returns 300. It will go to the credit side of trading account, but instead of taking to the credit side, we'll take to the debit side and we will deduct in the inner column. So 2000 minus 300, 1700. Creditors, it will go to the credit side of balance sheet. 1000 bank loan, it is liability. 2000, it will go to the credit side of balance sheet, means liability side. Rent If the rent is on credit side, it means this is an income. You know, all incomes goes to the credit side of profit and loss account. So you can write down by gross profit, and below gross profit we will write down by rent 700. Reserve fund, it is a credit item of the balance sheet. Take it on liability side, reserve fund 1000. In this way we have taken up all the items. Now let's fix wages and outstanding wages. These were the two extra items. On trading account you can see 2 wages 200 and 2 wages 50. There are 2 items of wages on the debit side of trading account. 200 has come from the trial balance and 50 has come from that adjustment entry. So it's not presentable that we are going to write down 2 items. So the best presentation of this thing is 2 wages 200 and in the inner column, and then add outstanding wages 50, and in the outer column it will be 250. So this will be the presentation of outstanding expenses. Whenever there is outstanding expense, number 1, it should go to the trading account or profit and loss account. In the inner column it should be added to the trial balance item, and number 2, it should go to the liability side of balance sheet. This journal entry can be made or can be avoided, it depends upon your teacher. But if you make the journal entry, it will become a bit convenient for you to understand the treatment of the entry. So in this way we have treated outstanding expenses. Whenever there is outstanding expenses, number 1, it should be added in the inner column in the trading account or profit and loss account, and number 2, it should be taken to the liability side of the balance sheet.